Hey guys, Brandon here, and today we're going to briefly talk about uncorrelated assets. And this concept is super simple. It's jumping out of the top of one asset class into the trough of another. So say here we have real estate like we have now, or say paper assets like stocks and bonds at 5,000 year highs. We're jumping out of that asset class. What is down right now? Well, we have commodities, gold, silver, uranium, Bitcoin. Super undervalued asset classes. And we're not going to get into today how we value those things, but the most important thing is jumping out of the bottoms of what we have down here. We have the top up here, right? So we're jumping down into this bottom, and then we're going to ride this wave up of these asset classes. The dollar is depreciating every day. All that's happening, the more the dollar depreciates, is these are going to go up in value actually. So these will end up going up in value, but they'll just keep up with inflation. That's about it. Paper might not even keep up, possibly. Real estate, that'll keep up. Over the last 10 years, it's just went sideways. Commodities and Bitcoin, these things will outrun, and this is where most people are going to get caught. They're going to get caught in this valuation channel and just get caught through here this whole time, just kind of bouncing back and forth for years, for decades. And this is where to really maximize your wealth, you have to jump from asset class to asset class. And it's not 100%, but majority of your wealth is going to go from undervalued asset to overvalued. So now, eventually, commodities, uranium, gold, silver, all these things will become overvalued at some point. And then eventually, you're going to have these assets, obviously down here. Now you're going to have real estate, paper. These assets will be undervalued. So now you're going to have these, which you're going to jump out of. You just keep jumping in and out of asset classes. So you can imagine what this will look like, obviously, is when you have at the top of a cycle, if you're hitting around the top of the cycle, you're not going to hit it every single time. But if you hit a little bit of that cycle, what you're going to have is little points up and little points up and little points up, instead of just doing this the whole time. So you're going to catch this whole wave going up from every 10 years, every 10 to 20 years, and creating generational wealth instead of just being trapped in this valuation channel. This is an incredible concept to learn, and something I learned 10 years ago. And the other thing I just wanted to show really quick was that, again, the dollar is here, and the more you print of that, that's actually going to be the real estate, like we were saying before, paper, and all these other assets in general. The more you print this, the dollar goes down in value, and the value of these just go up. They stay the same. The actual intrinsic value is still the same. It hasn't changed. These houses are still exactly the same. However, the dollar is what's losing value. And the more and more dollars that are printed, it takes more and more dollars to buy those assets. More and more dollars to buy that real estate that used to cost 50 grand, 100 grand, now costs 500 grand. Same house, but it costs more of these dollars. We're printing more, we're devaluing it. It's just the denominator. The numerator and the denominator are the ones changing, right? So it's a fraction. So the more you have of something, down here, the denominator, it's going to cause these to go up in value. So uncorrelating assets, be careful. People always talk about diversification. Diversification is something that they talk about on Wall Street and CNBC and the wonks there, the talking heads, the pundits. But they're talking about just getting an ETFs, getting an uncorrelated ETFs and things like that. If you're just a paper trader, that's smart. You want to be in uncorrelated assets in the paper world, talking about beta and all these different things, right? But that's not what we're talking about here. We're talking about true diversification. We're talking about being in real estate, paper, business, commodities, crypto, or really Bitcoin. You want to be in uncorrelated assets. That way you can ride this valuation up and you're not stuck in that channel. We do not want to be stuck in that channel, because then you're trapped. You're trapped in just crashing, then you got to build back up, and it's crashing, you got to build back up. And then the beauty of all this, which again, we will get into more as we go forward and have specific videos on it. But the most important thing, say, when you're jumping in on these channels, say you ride that paper goes down, real estate goes down, and then you're using your commodities, you're using their winnings from there to purchase those things low. What happens when you're purchasing those things low? Well, you're going to have great alpha over time. You're going to be beating the market a ton over time in general as you're getting these assets. As you ride those up, say your paper, your corporate aristocrats, well, what are they spitting off? They're spitting off dividends, right? Talk about passive income, dividends, and then you're writing maybe covered calls on those, and you're supercharging your passive income. Those are two huge ways that Wall Street doesn't want you to know about, but as we go forward, there's a million great YouTube videos out there on how to do things like this, but we'll talk more about this as we go forward. As you ride this down, like we said, you use your commodities winnings, you use your gold and silver, your Bitcoin, and you use those winnings to purchase and ride that at low, and then you ride these assets up, paper assets, and get your dividend paying stocks. That's going to provide massive cash flow going forward. So, and then writing covered calls again. So that's what Warren Buffett does all day long. It's all he does is these two things, passive income, or you're buying real estate. You're buying cash flowing real estate. Maybe you're buying multifamily. Maybe you're buying self-storage. Maybe you are buying single family homes, single family rentals. Just depends. It's all what you want it to be, but you won't have that chance if you're just riding that valuation channel back and forth. So give yourself that unfair advantage. Uncorrelated assets. This is easily one of the biggest concepts that's the most missed. And I'm so passionate about this. Having this concept down is life-changing, is generation-changing, because you are now going to be out of that channel and you'll forever change the way you invest because of being truly diversified, being in different, you might add some fine art collectibles and things like that in there, jewelry, cars, art, other asset classes in there. Obviously, you could break out crypto. You could say, hey, I have Bitcoin here and crypto here. You can really break out your asset portfolio allocation. And again, we'll get into that. I'm going to show you what I've done in the last few years to really increase our net worth and just continue building that with uncorrelated assets and just really being mindful of how we're structuring our portfolio. So that is uncorrelated assets, guys. We're going to have a lot more videos on this going forward. We're going to have a lot more, really like meat and potatoes of what exactly is going on and how we are structuring a portfolio, how we have in the past, and how we're going to do it going forward. And like I said, this is the first phase of structuring it now. We're just kind of in that area where there's not a ton of cash flow necessarily coming from buying energy stocks or buying Bitcoin, gold, and silver. But again, that next phase two, I call it, over the next decade here, is going to be massive winnings, not only in appreciation, but really the game of cash flow. And the cash flow is really what you want as an investor. That is the most important thing. Anyone that has studied any business at all, any investing at all, cash flow is the name of the game. You want to be buying for cash flow, and that's what these provide here. And then that's what these provide here. So we look forward to seeing you guys next video. Let me know if you have any questions on uncorrelated assets and what else you might want to see in here, portfolio structures, or a deep dive into any of this.